Did you know the United States now has a trade deficit of over $1 trillion with its top 10 trading partners? That's nearly the size of the entire GDP of the Netherlands, and it's a record high. Welcome back to the Commercial Pulse update for April 22nd, 2025. The Experian Commercial Pulse report is a bi-weekly report offering a snapshot of the US economy and its impact on small businesses. Let's start with what's happening in the broader economy. Inflation cooled again in March, dropping to 2.4%, and that's the lowest since early 2021. Core inflation also declined to 2.8%, showing continued signs of economic slowing. Unemployment ticked up to 4.2%, its third straight monthly increase. Still, the labour market showed resilience with 228,000 jobs added, particularly in healthcare, retail and transportation. Small business optimism dropped sharply to 97.4, below the 51-year average. This suggests growing unease among business owners amid policy shifts and trade tensions. Consumer sentiment also dropped sharply to 50.8 in early April, its lowest reading since mid-2022, highlighting increased public concern over inflation, interest rates, and global volatility. And the February reading of the Experian Small Business Index rose to 45.4, up 3.9 from January, marking the second month of modest gains. And this reading reflects small business conditions prior to the rollout of trade tariffs and subsequent 90-day pause. With so much discussion about trade policy in the news this week, the Pulse report includes some interesting background. Since the presidential inauguration in January, tariffs have surged to the forefront of economic policy, from universal import duties to industry-specific hikes, and these moves have created market volatility and clouded the outlook for many small businesses. So we thought it would be a good time to put the problem into perspective. The US is now running a $1.1 trillion trade deficit with its top 10 partners and a $990 billion deficit across its leading import categories. However, there is a silver lining. US exports of mineral fuels and plastics have outpaced imports, yielding a $70 billion trade surplus. In February 2025, US manufacturers recorded a record $596 billion in shipments, inventories, and orders. The industry is recovering robustly from a two-decade-long decline that saw over 6 million jobs lost and 65,000 businesses closed between 2001 and 2013. Interestingly, while manufacturing has rebounded in terms of business volume, employment has remained flat, indicating that new growth is being driven by small businesses and not legacy giants. We're also seeing a credit transformation. Younger manufacturing firms, those under 2 years old, now make up nearly 13% of monthly credit originations, up from less than 1% just a few years ago. And their average balances have nearly doubled from $33,000 in 2022 to $57,000 in 2025. And this growth in credit demand shows small business manufacturers are not just surviving, they're expanding, investing, and increasingly shaping the national industrial footprint. And there's a lot more on the trade dilemma and credit trends for the US manufacturers in this week's report. Remember to visit our Commercial Insights Hub for more insights on small businesses. Subscribe to our YouTube channel, of course, and definitely reach out to your Experian account team to start a conversation. Last, remember to stay informed, stay ahead, and we'll catch you on the next one.